Hello, and welcome to the special edition of The More You Know. My name is Portia Boshomane, Head of Credit at STANLIB Asset Management. As we mark Women's Month in South Africa, we look beyond the question of representation in asset management to real influence. Who will have the authority to shape investment decisions, client outcomes, and influence the industry? Joining me is Eulali, our Head of Money Market, and Kimone Maharaj, Investment Analyst in our infrastructure team. Ladies, welcome.
Thanks, Portia.
I'll start with you in the money market space. I think in order to understand the future, it's important to understand the past and the present. What would you say have been some of the major global and local forces that have had a significant impact in the money market space over the last 10 years to date?
Portia, for me, it is the impact of the change in the monetary policy implementation framework. So what happened there is it was a change in how the SARB manages its liquidity. It went from a deficit to a surplus liquidity management system. And to explain that a bit more, in a deficit system, the banks would go to the SARB to lend money to fill their deficit. In a surplus system, the bank places deposits with the SARB in order to fill a specific quota. And the banks can only fill a specific quota and are therefore so cash flush. What this means is they don't want to take additional deposits from non-banking financial institutions. So what do banks do when they don't want your money? They make their prices less attractive. So what this impact has had on our business is it has made credit spreads compress significantly. And this is unfortunately or fortunately a structural fundamental change that's permanent, that's here to stay. Things like the war has an impact on money market rates, interest rates, inflation, but the market tends to shift again as soon as things normalize. Whereas the monetary policy implementation framework was a permanent structural shift that we had to get used to trade at lower spreads. But I think, Portia, as head of credit, you can also contribute and tell us what impact it has had on credit spreads in a credit market.
Yeah, definitely. We've also seen that significant impact in the credit market. You've seen bank spreads come in quite significantly. Corporate spreads also come in quite significantly. FLAC, we saw the inaugural issuance beginning of this year. We thought FLAC was going to bring in some flow into the credit markets in order to balance that demand and supply dynamic that we see. So at the moment, what's happening is that the market is trading without fundamentals. I'd say without fundamentals, but maybe the word is it's not only fundamentals driven, it's demand and supply. So there's a lot of demand for credit paper and there isn't enough supply in the credit market. And so what we've seen with FLAC, for example, we expected FLAC to price 15 basis points to 20 basis points above senior. That wasn't the case. We actually only saw a 5 basis points trade over senior. And then also to date, since beginning of the year, we've seen a 10 bip tightening in spreads in the 3-year tenor. So that shows you the level of demand there is in the market. If I think about also recent huge corporate trade Transnet came to market last year, they were 8.45 times oversubscribed. That's how much money is looking for assets in the market.
No, there's a lot of cash in the market and corporates does not seem to be spending it. And there's a lack of places to put it. So, we're sitting on a lot of surplus cash without finding a home for it.
Yeah, absolutely. It's a big problem in our market. And we need growth, right? It's either growth or big events. We have seen significant local and global shifts, but that still hasn't changed anything in the SA market. And Kimone, from an infrastructure point of view, are there any significant trends we've seen in the last 10 years that you'd like to highlight?
Yeah, I think from infrastructure, I think we're all very aware of the underinvestment over the last few decades in the sector, which is why there's such a big push for private sector involvement. There's a 4 trillion rand funding gap in the sector, but we've seen positive transformations, specifically in the energy sector, through the government-led program under the Renewable Energy projects where you're bringing in private capital to actually fund and develop these projects. And then more recently, the liberalization of the energy framework, which really makes the market more competitive by bringing in private players again to actually play a more meaningful role in generating and selling clean energy. And then more recently, we see the rail network opening up. And you would have seen our recent investment in Traction, which has been really exciting for the team and really important for the country. And we're hoping that water reforms will follow soon.
Sounds exciting.
Yes, lots happening.
And it speaks to the Transnet oversubscription, right?
Correct.
Clearly, there's a shift in that rail space.
Correct. So,
and then if we move on to the digital space that you're in, I mean, this is the world of AI and the digital era, Eulali. The question is, how do asset managers remain credible in this very noisy digital era that we're in?
So asset managers maintain their credibility by prioritizing data transparency and proactive communication. So talking to our clients, showing them what's happening in the market by using visual tools and showing our investment strategies, keeping it authentic. If any new news comes out in the market, we are on top of it by publishing articles, doing podcasts about it, doing webinars. So keeping it authentic so that people can trust the data that STANLIB puts out there for them. But I mean, with all this information, how do we treat misinformation that might come up in the credit market?
Yeah, I mean, that's a great question, Eulali. So what we're seeing in our space is also it's a lot of noise that comes through, and it's important to sift through the noise. So to your point, we look at, newspaper articles daily. We're tracking, continuously monitoring our credit counterparties to be that. And what we do is we do a process of validation. Firstly, the source has to be the right source. We're not picking up the information from any another source, so credible sources. And once we have that information, we also engage a lot with management. So we'll set up meetings with management. We'll set up also engagements with other analysts, so equity analysts, credit analysts that sit outside of STANLIB and within STANLIB. And that's how we help ourselves to validate the information. We also use credible data sources. So internally, we've got our own databases. And then also, we only look at credible integrated reports. We investigate those to sift through the noise. So that's how we at least protect ourselves from a credibility point of view in terms of the sources we use.
Yeah, and I suppose always referencing the source is a very good thing to do.
Absolutely. Yeah. Thank you, Eulali. So I'm glad to hear that the machines are not entirely taking our jobs. But do you have practical examples of how AI is being implemented in the money market space?
Yeah, so we are more office bound. We don't go out to site visits. We are bums and chairs people. For us, we're active managers. So AI is something we use to assist with report writing. So writing fact sheets, making sure my English is appropriate for the audience. That's what we use AI for a lot. Perhaps for a passive manager, that's more for me where AI will come in. But on an active manager, AI can be used to assist you, but not do what you do.
And also in the credit space, what we're seeing is from an AI point of view, it's really automation that we're finding to be of value. It's not doing the analysis for you as yet, but it's the automation. So reducing the manual work that you'll be doing typically in the credit space. So I think it's been great so far. In the infrastructure space, Kimone, are there any practical examples of the use of AI?
Yeah, certainly. I think from the investment perspective, we'll always use it for some of the efficiencies, but the practical on-the-ground work, which requires you to go out to site and spend some time with communities, for example. We invest in a lot of community projects, and that means spending time with people, actual people, seeing the tangible differences that your investment is making. And actually, whether it's building a school in a community or an early childhood development center or a computer lab, AI tools are not going to replace that human interaction.
Kimone, on the infrastructure space, yield and return is a big consideration. But to remain relevant, beyond 2030, as an example, what other outcomes or considerations should we be thinking about in the infrastructure space?
Yeah, so as you say, these investments are stable, long-dated investments. And by its very nature, infrastructure is meant to support the economy and drive growth. But returns aside, while these are always relevant and consistent returns, I emphasize, relevance is really underpinned by the quality of the underlying assets, and really how meaningful and how impactful their reach is. And I think specifically in the South African context, we're seeing investors talk more about ESG and sustainability themes. And again, it just highlights the socioeconomic challenges that we face and how important these are to investors.
Yeah, definitely. I mean, we're seeing a pickup in those ESG issuance in the credit market, Eulali. So we've been seeing a lot of corporates issue ESG linked, so sustainability, social. So I guess, it speaks to the trends, some of the trends that we're seeing in the market.
Yeah, definitely.
Yeah. And Kimone, do you think there are misconceptions around the type of qualifications and talents that should be working in the asset management space?
I think that's an interesting question, and I think I'll leave it to you, Lali, to speak about the wider asset management. But certainly in infrastructure investing and the typical private equity kind of roles, we follow a more traditional trajectory, which usually follows corporate finance or investment banking, which ultimately gets you to the side of the table. But that being said, I think I've had the privilege of working with people from so many different backgrounds, so many different degrees. And I think it's invaluable, the diversity of thought, diversity of perspective that you bring to the table. So I think I would definitely emphasize that.
Yes. I mean, sure, our team comes from a wide range of qualifications. Myself is an auditor by training and now sitting as a portfolio manager. We've got people in our team with maths degrees, engineers, economics is a very common one, but there's not a specific path you must follow to come into asset management. You must just have the passion to do it.
Yeah, fully agreed, ladies. If we were to build our own asset manager from scratch today, what would it look like to ensure that it remains relevant?
So always when somebody thinks something in the future, you think, oh, robots must run it. But for me, the key in an asset manager, it will still need people. People are the heart and soul of an asset manager. Remember, we deal with people's money and people want to speak to people and rely on people. Our business is based on trust. So I would say you would still need the relevant people.
I have to agree. I mean, people make the business, but tied to that, I think, is also the culture that you foster, and if it's one of learning and the support that comes behind that. And that's tools, that's ongoing learning and training, and it's the technology that we move along with. So I think those are all important things.
No, fully agreed. I mean, AI is here and it's here to stay. And I fully agree that, it's how you incorporate that with the people. We are a people business at the end of the day. And I also think to remain relevant beyond is really to incorporate the two sort of side by side. The asset manager of tomorrow will still requires world-class investment expertise.
Yes, Portia. And if I can add on, it will still require rigorous research process and disciplined decision making.
And I think that human judgment, which is supported by AI.
And that's where we'll leave it for today. Ladies, thank you very much. Kimone Maharaj, investment analyst in our infrastructure franchise. Eulali Gouws, head of our money market team.
Thank you so much.
Thank you to you, Portia.
Thank you. Asset management is a fascinating industry that goes far beyond generating returns. It helps fund progress, creates opportunities, and improves our lives. We hope to see more women stay the course, lead with confidence, and hold the door open for other women to walk through. Thank you very much for joining us for this important conversation.
STANLIB Asset Management Pty Limited is an authorized financial services provider in terms of the FASE Act. This content should not be construed as advice.